Join us for Live from the Pit, where we deliver high-energy trading insights. Experience live preparation and execution with real trades and actionable setups. Trade smart, not impulsively. Expect precision and discipline in every move. Watch the charts, feel the momentum, and make informed decisions. Join us daily at 9 a.m. and become a confident trader without the noise. Subscribe to @Pitbull Traders on YouTube and
Good morning, everyone. Sound check. Excellent. Thanks, Stuart. Good morning, everyone. It's Thursday, May 7th, 2026. New day, fresh start. Welcome to Pitbull Traders Morning Game Plan. I'm your host, Manny. The purpose of this show is simple. Real-time technical analysis, actionable trade setups, all with the focus on building the real trading skills and the mindset designed to drive consistent profitability. All right, every morning we'll come in with one goal: to build out the structure before the open so we're operating in alignment with the day's dominant forces. We're not going to chase, we're not going to guess. All right, guys, let's get after it. Let's map it out. Simple to see here. We're going to start off like we do every morning. We're going to start off with our higher time frame analysis, and then we'll drill down to the 15-minute and check to see how we can trade the day. All right, so immediately on the left-hand chart, you'll see we have the 4-hour time frame. And, you know, we went over yesterday, every pullback, the hourly trend is still intact. It's just been this grindy move higher ever since we put in the pullback low at 71.99 a few days back. Okay, and that low came in on May 4th. So it's just a few days ago, but you can see even on the 4-hour, you know, higher highs, higher lows. And so the trend is intact. We busted through this trend line, and so I'm going to remove this trend channel now because I don't see that it's being respected. All right, so again, we're still focused on a higher time frame target, which is up here at 74.50, 7,500. In case we do get a pullback today, if we see a liquidation break at any point today off the open or whether it's later in the day, we're going to keep an eye on this high here at 7,375. That's about 100 points away. So just be mindful of that. We could see a pullback, and if we do, we want to make sure that we have that number in our narrative. Okay. All right. So let's just get into it. Let's go into the 15-minute chart and let's map out the day. All right, we're going to start off like we do every morning. We're going to ask ourselves, what is the state of the overnight inventory? All right, so to discern that, we're going to look at what was yesterday's settlement. Yesterday's settlement was 73.89, and we can see just by looking at the chart that most of the volume and most of the trade that has transacted has been above the settlement. So we can discern from that our overnight inventory is net long, and we have to be on alert off the open or at any point today for a liquidation setup. Overnight inventory was net long, and what we saw was a continuation of the trend, right? We gapped up, we gapped and gold. There was somewhat of a liquidation break later on in the day, but that just formed a higher low. On the 15-minute, price came down, traded down to the 21-period moving average, found support, and traded higher into the close. And one thing that we can see is that price didn't even test the volume-weighted average price, which is interesting because that just means that higher value is developing each day. All right, so coming into it today, let's see what we have. Now that we have that framed out, we're going to start off like we do every day. We're going to map out the most bullish scenario. We're going to map out the most bearish scenario. we're going to talk about a bullish trap trade. We're going to talk about a bearish trap trade. We're going to try to stay in alignment with the dominant forces, which is to respect this uptrend. The thrust of this move has been, anything has been just awesome, right? It's just been every day. It's just higher prices, higher prices, higher prices. And the one thing we don't want to do is fall into a mindset of trying to fade this move. If you've tried it, I understand trying it here or there, but we want to make sure that our trades, the ones that we're focused on, are in alignment with the dominant trend. For that, we use the 4-hour time frame. All right, so coming into today, let's map out the most bullish argument. We're currently trading 74.01. If price opens here, what we have to look for, obviously, like we do every day, is we use our day time frame references. So immediately what stands out is what? The overnight high, right? The overnight high is at 74.10. That's always an excellent day time frame reference, which lines up really well with our 96% stat. All right, so if we're opening up at 74.01 and we get an open drive higher, which breaches the overnight high, immediately what we're going to start looking for is long entries. We're going to also gauge the strength and the momentum of that move to make sure it has some follow through and it doesn't peter out, okay? But immediately what stands out here is that we formed this balance area roughly between 7,400 and 7,390. So on any pullback, we want to see that area hold. I think that's a good marker for long trades. But if we break above the overnight high, and if we get a pullback right into this area, 7,400, right, we're going to look for price to stall out, for those sellers to be absorbed, and for price to start inching higher. At that point, we'll start looking for long trades. We'll look for entries that get us to the overnight high and maybe even higher up into blue sky territories. There are no upper references here. We're just in blue sky territories. It's just moving higher. So we'll take our scales along the way, get into a runner and manage that runner, trail it, give it some space to work, but obviously trail it up so that we'll make sure that we're in profit. So if we get that open, we breach the overnight high, immediately what we want to do is watch the overnight high. If it holds, then we can use that as a marker for long entries for the move higher. If we lose it and we come back below and test 7,400, at that point, we'll look for the same scenario I just mapped out. All right, so that maps out the most bullish argument. We'll see what plays out at the open here. Okay, now let's map out the bullish trap trade. Okay, so say we open it, we're opening here at 7,400 and price, we get an open drive higher, price fails to find acceptance, forms a lower high, and then comes back into the overnight range, right? We know that that often happens throughout the day. At that point, we'll look for pullbacks and an inability for price to reclaim the overnight high. If that happens, then we can start entertaining short scalp ideas for maybe get down to a gap fill. But our risk marker becomes this local high that forms, as well as the overnight high. If price is unable to reclaim it, then we'll look for short entries that get us down to our first target, which would be 73.95, yesterday's high. Maybe even get down to the settlement at 73.89, or even a test of value area high, which is 73.86. Now remember, every day has a value area, and that value area is where 70% of the prior day's volume took place. So yesterday's value area, the higher portion of that range was 73.86. The lower portion of that range was 73.48. So let's just be mindful of those, keep those framed out in our mindset, right? And add those to our narrative. If we get into value, right? So initially what we're going to be looking for is a test of the overnight low, 73.77. And at that point, if price finds acceptance within yesterday's value area, well, then what? The value area stat or rule of thumb comes into play. And the value area rule of thumb states that if price finds acceptance, if price trades outside of the prior day's value area and then comes back into the value area, and finds acceptance, then typically what you're going to see is price traverse the value area. So say we come in to value area, we come back up and test it, price chops around, and then at that point we could look for a move down to yesterday's volume point of control, which is the price where the most volume traded, and ultimately look for a target down to value area low at 73.48. Okay, so that covers the bullish trap trade. Now let's look at what the most bearish idea would be. Oh, forgot to get a snapshot of that. All right, so say we're opening here at 7,400 and immediately off the open, we see a liquidation break, right? The first thing we're going to monitor is what? Yesterday's settlement, right? So if price gets under yesterday's settlement, typically what you're going to see at the prior test of the settlement is you're going to get a bounce there, right? Maybe it's a point, maybe it's 2, 3, or 4, but we want to gauge the strength of that bounce, right? Because if price comes immediately down and starts retesting that settlement and gets into the value area, then we know that this is going to be more of a liquidation break as the buyers at the settlement are trying to push price higher are failing. They're going to be liquidated, and we're going to look for a move down to what? The overnight low at 73.77, and then maybe even a move down to yesterday's volume point of control, which is the highest price traded, the highest volume traded yesterday, and that's 73.66. All right. So again, if we get that liquidation break right off the open, immediately our reference is the 73.89 settlement. If we get below that and get into value, then yeah, we're looking at short scalp entries with our backs or our risk marker being the settlement at 73.89 or even yesterday's high, and then potentially a move down to what? The volume point of control, which is yesterday's highest volume traded price. All right, so that covers that kind of the liquidation break off the open. If we get through the volume point of control, we'll have our entry there. We'll be in a runner, and we can just trail that aggressively. We'll look for price to peter out or to pause at the volume point of control, and then we'll gauge the strength of the momentum of that move for follow through and reassess at that point. Okay, but we should have our scales out of the market. This is the way you get to your evaluation where you can pass it and also not fail it by risking too much or staying in the entire position. You want to take those scales as you're trading it. All right, so that kind of covers the most bearish argument if we get that strong liquidation break. Now, let's cover the bearish trap trade. What might that look like, and what are the possible scenarios? What are the things that we're going to see that give us a sign that, yeah, you know what, bears are going to get trapped again, and there's going to be a continuation of the trend higher. All right, so immediately if we get that move lower and we come down, we get through the settlement, right? And immediately the settlement gets reclaimed. At that point, we're going to look for a higher low and a reclaim of the settlement for maybe a move up to what? The overnight high at 74.10. Again, taking our scales along the way, but we're going to look for it for the settlement and the value area high to fail, a rejection from yesterday's value area, and then a reclaim of the settlement. At that point, whatever the local high was that got us there, that got us that low, we'll look for a break of that high, and then we'll look to enter with strengthen the momentum of the move. We'll look for, if we can get a continuation move, again, taking our scales at yesterday's high, and then ultimately the overnight high. But you see, that might materialize much like it did a few days ago. And there are a couple of different permutations on how that can happen. Let's go through another one. Okay, so say we get the liquidation break and price breaks lower, cuts back into value, gets to the volume point of control, and then at the same time, it starts to peter out. And it gives us signs that the sell is kind of losing strength, losing momentum, and buyers are stepping in, absorbing those sellers. At that point, what we're going to look for is a re-entry into the overnight range. The overnight low is 73.77. So we want to see that get reclaimed, okay? And at that point, if that does get reclaimed, we'll look for a pullback entry that with our first target being what? Yesterday's high. Okay, and a good entry there would be on the reclaim of whatever the local high is that forms on that move higher. Okay, so that's the bearish trap trade. Again, that can materialize at the volume point of control or underneath the overnight low, and we know that at that point we'll be looking for a reclaim of that level, and then at that point we'll start to look for long entries to the upside, targeting yesterday's high and ultimately the overnight high to satisfy our 96% stack. All right, guys, so that kind of maps that out. I'm being joined this morning by Rich. Rich has an interesting approach. Rich is a data-driven trader. Everything he does is statistically based. And so I'm interested. I can't wait to hear what Rich has for us this morning. Hey, Rich.
Morning, Manny. Can you hear me okay?
Yep.
Okay, good. We're just about to open here. Well, I'm looking at the ES. I don't think my target for the ES right now is 74, 71, 88, and then 74, 92, 77. I don't think we're going to get much of a pullback until those happen. We're going to have really good support down here at 73, 49, 25, but it's unlikely that we'll even go down there. We should go back down and fill to the settlement yesterday's settlement that I used of the settlement at 73.94. And the NAS is really strong today. The NAS has been incredibly strong, and the NAS has almost met my target. But I have these two targets for the ES, and the way I look at these things, it's a 90% probability that we'll hit those, before any even little pullback right now. I mean, this market's just incredibly strong. And, one stock that I trade a lot is, and I have a position on is Intel, and I looked at that chart. So this is what let me grab this right here, just so you know what I'm thinking here. Intel, I just got through working on this, and I actually have a target in Intel right now. And I'm very sure it's going to go there, and real soon, probably by next week, 129.87. That's my target for Intel right now.
Great, thank you. And what do you thought? Can you give us some levels on for ES for the folks watching at home?
ES today. One of the things I do is standard deviation levels, and they're based on implied volatility. I use the option pricing model and with some modifications. And so my 1SD levels for today. I'll show you one of my sheets. My 1SD levels today, I have them on the chart here, up and down. These are, down one is 73, 38, 15, and up above is 74, 49, 85. And what those are is the options pricing model uses this standard distribution. So it's like 65% probability that, it'll remain within one standard deviation up and one standard deviation down, and 95% that it'll remain within two, and 99% that it'll remain within three, 99.9% that it'll remain within three standard deviations. And I've been doing this for years, and it really, although the stock market does exhibit, a slightly greater probability of some of the bigger standard deviations being hit than you'd expect. And for sure, every once in a while we get those 4, 5, 6 standard deviation moves, and they happen absolutely a lot more than you would expect. I have a theory about why that's like that, but those I look at, and if you use these standard deviation levels in concert with what other tools you may use, I mean, it's a place, for targets, and you'll find support and resistance at those levels. And the reason that is because, like, big firms, these big HFT trading firms, Citadel, Jump, stuff like that that have like lots of options traders trading many different options. When the market moves and makes a one standard deviation move, they have to adjust their positions. And usually a risk manager that's overlooking all the traders will make those adjustments. They just have to be done at one standard deviation. So that's why you get market reacts at these levels all the time. And my levels in the S&P, because it charts so well, they are really good there. I mean, I regularly hit those levels. That's and you can see I don't have many other levels to the upside because there are no other levels to work with. I used fractal timing analysis is what I call it. I look at time fractals, and that's the different colors of my lines on the chart, and they all indicate different things, and the market reacts different ways at those levels. My main levels are these big magenta levels. That's the 1440, and these are 480 levels. And the way I draw them on there is, it's kind of unique, but they work.
Okay, so Rich, looking at your stuff today, give us one level that matters. Give us what's your most important level for today?
Well, right now my most important downside level is this 73.49.25. We should not close below that.
And that's, I'm sorry, can you repeat that level one more time?
73.49.25. These purple levels like this are those are levels that we can penetrate them, but you don't want to close below them on a daily level. Okay, you can go through them, but they should, on a daily closing basis, they should hold. And we've had 3 really big up days in here over the past week and a half, and that's what these are. These are those levels from those days. So if it was to take out all 3 of them, and then the market, we would definitely be in trouble. I mean, the market would be signaling that something really different is happening. It would be. I don't think that's going to happen, but that's what I'm looking at. And this 1 standard deviation level down here, it should react to these.
What level is that?
That is 73.38.15. It's basically it's like 11 points below this other one. My target, which I told you, I had told everybody in my room like a week and a half ago or so, was this 74.71.88, and I think we are going to go here. This is going to happen, and probably by next week, the way this market's moving, I don't think it could go there between today and tomorrow, but maybe not. I mean, we've had such big moves, but.
So Rich, let me ask you a question. So for your 73.49 level, right? Given that said, right, so what's a good way to trade that? So say we do get down there, price trades through it. Would you be buying that at the support, or would you wait for price to find a balance or a reclaim? How would you trade it?
I have like a shorter term indicator. I call this the BGL.
Okay.
And that stands for big green line. This is something that I've watched for years, and it works really well in the S&Ps. You can use a simple or an exponential moving average, 21 period moving average, and then the other line is the VWAP. And when you're trading below the BGL and the VWAP, it's always bearish, and when you're trading above them, it's always bullish. So if we were to go down to those other levels, I would wait to buy until it broke out back above that line if it was trading below them. I would not buy if the market was down and we hit those levels until it actually started trading back above the BGL or the VWAP. I wouldn't be a buyer.
Okay, right. So yeah, typically that's how I don't like to enter, with a limit order at certain supports unless it's a deep support, unless I have a lot of things backing it and I'm willing to lay out at least a 10-point risk, right? I typically like to engage levels like if we trade there, then I'll buy it on a reclaim, or I'm looking for a balance area. I'm willing to pay up a little bit, but I want to see some type of support there. I want to make sure that I'm not the only guy buying that.
Yeah, I mean, you never can tell when things are trending. There's other things that I look at, but if I was short and it was going down, I would absolutely, I would be thinking about covering right now at that purple level, and for sure at the 1 SD level, because I'm very bullish right now. We are going higher.
Right. Yeah, I mean, that's evident, like in the left-hand chart that I'm showing here, the 4-hour chart. I mean, that's just this real.
Yeah, and that's my 480. That's a 480 is actually it's an 8-hour chart, but so I use something double of what you use, and those are my gold levels. But I look at the numbers that I really like to look at. This is for fine tuning things right here. This short term chart, but the numbers I like to keep a 60-minute chart up. I don't like to trade, in anything really less than a 60-minute chart. And then I look at the 60, the 120, the 240, the 480, and then the 1440. 1440. There's 1440 minutes in a day, and those other time fractals are all fractals of the 1440.
Right. I think we share the same approach there. I tend to frame it on the show here with a 4-hour, but I really like the 2-hour time frame, and then I'm using the 15-minute for execution.
Yeah, and I mean, that's Manny, and you've been trading a long time too. The higher the time frame you use, I mean, if you can stay in sync with that and get use a shorter time frame for execution and be on the right side of the trade, I mean, you can get big moves.
Right.
I mean,
right.
and that's what it's all about. I've been a trader. I mean, I started trading back in 1989. So I traded on
quite a bit.
I traded on the floor, and there you were trading for a tick. I mean, and I used to trade for a tick, and I'd make 1,000 trades a day. And I mean, and when I go crazy, even now, I still make 1,000 trades a day.
Well, we all have those days. I think it wasn't too long ago. I checked my statement, and I think I had 151 fills. It was wild.
Yeah, well, I do that typically when I'm scaling in or out of something. Because I put on positions, and if I have a big position on, and I'm trading a stock, I mean, I might buy 25 shares at a time or sell 25 shares at a time.
Right.
Especially when I'm getting out of a winning position, I call it feeding the beast. You gotta give them a little bit every once in a while, because then they'll, if you're long, they'll chase it up, and you got to feed the beast. So,
hey, really quick for the folks tuning in, right? I just want to bring you up to speed. So we're monitoring here on the ES. We're looking for what happens here at the settlement, 73.89. And do we get to find support at yesterday's value area high, 73.86? Similar to what we had yesterday, right? The one thing that I'm noticing here really quickly that's not like yesterday is that immediately I'm noticing that the internals are red. Okay, so we're 1-to-1 negative on the NYSE, and we're 1-to-1 negative on the NASDAQ. Okay, so just be mindful of that here. We could see a stronger liquidation break where we reset that overnight inventory that's net long. All right, so let's just be mindful of that. We have the levels, we have our timing. If you need the market blueprint, that's on my X feed at Manny_trends, as well as the execution clock. So stay alert for that. That all the support levels I'm going to be trading today. We got the levels from Rich. Awesome. Anything else you got, Rich?
No, I was working on I'm working on a lot of my programs. I've been kind of because I'm in the process of selling my house to downsize. I haven't updated a lot of my stuff, and it's like a full-time job just to update my stuff, and I'm making some improvements to it. I did some work earlier this week before I updated my monthly, and I went in there, and I would show it now, but there's some things that I still have to fix and change and fill, and I want to do that before I show it. But my indication right now is that I'm expecting the year to be up as much as 19% for the year.
19%. All right. So what's that target price for the folks.
That takes it up to about 8,100. And the interesting thing is that when I did one of my measures here this morning, it turns out that it's 81.21 is the target, and that's probably pretty close to where I'm thinking the year's going to end up. 81.21.
Wow, that's massive. That's about 700 points high, well, about 600 points higher on ES for today. That's a massive move. Super bullish. I mean, I think that, yeah, we're going to see some pullbacks here. I think that we'll probably see a pullback sooner than later. But yeah, I think that ultimately will be bought and we'll trade.
Well, let me just let's see.
Hey, if you're just joining us right now, I'm Manny from Pitbull Traders. We're tracking the ES. We just traded the settlement, which was one of our targets on a liquidation break. So stay alert here. We're going to look for support. We're going to look to see if price can find some buyers here at this level. Also, we're going to monitor the value area high, which is just below that. But yeah, we're getting that typical bounce from the settlement. Let's see if this move can gain a following and gain traction to the upside. Yeah, and so if we do find that support here, then we're going to start targeting obviously our opening print at 73.99 quarter, as well as maybe even the overnight high, which is up at 74.10.
Yeah, one of the things I was just thinking about was writing down, Manny, but what I'd like to do, and I will do it eventually, is, and I write these things down that I want to do, is I want to look to see, we had almost a 10% correction back in March, and I want to see how often I'll take a look at all the years we've had 10% corrections in, and see how, what has happened in the rest of the year, especially if they've come in the first quarter. How often that the market has pulled back an equal amount, or if it's pulled back at all in the year after a 10% correction.
Okay, interesting.
I actually have a database that has all the corrections in it.
Anything interesting coming from that?
Well, I have to program in the question to see what, to see if a 10% correction is, then what happens. And, sometimes it's just a matter of identifying where they were, and I'll have a list of them, and then I can just kind of look on a monthly chart and see. But that's why I wrote the question down. I'll get to it eventually, but and I have a sheet of paper, like 2 inches high with things that I want to do and look at.
Hey guys, real quick. So here's what we just saw. I just want to alert you to it, right? Because this is very important, right? This is a strong nuance in ES. So earlier in the day, during the pre-market prep, I outlined, hey, we're going to trade down to the settlement. You typically see a 1 to 2 point bounce from there. That's exactly what happened on this bar here. We traded down, we found some support, and then we traded up for a few points. What we need to do now is gauge the strength and the momentum of that bounce. So we bounced initially off the settlement, traded a few points higher, and now we breached it and went below a few points shy of what? The value area high, 73.86. All right, so let's see. This bounce is not very strong so far. Let's see if bulls can gain a following. Switch this back. Hang tight. Sorry, folks. Yep, I'll just go through that for the folks tuning in on socials. I apologize. So here, just on this chart here, what we outlined earlier was the settlement at 73.8950. Right, we got the initial bounce off of it. I think it petered out somewhere around 90, 93, right? And what we want to do here is we want to judge the strength and the momentum of that bounce. Thus far, it's not telling. You can see it really well here on the 1 minute chart, right? So we breached it, we traded higher, and now ultimately those buyers are being liquidated. All right, so let's monitor value area high 73.86. That's what we're following here. Let's stay alert. I think price is going to ultimately look for a low. But what we're seeing here is really the overnight inventory that was net long. We're seeing a liquidation of those positions, kind of resetting of that inventory. And where things start to change is really below the overnight low. Okay. So, I mean, this move is so strong that it's hard to find references when it's just been straight up. Like even on the 4 hour, right? I think you have to go way back down to 73.25, 73.27 to really find a change in the trend. So stay alert here. Let's watch this. Let's see how it materializes. So far, our low is 73.85 quarter, and 4 contracts came off there below. You got any trade ideas this morning, Rich?
No, I'm really, I'm just in a position, and I have a couple positions on, and one of them was I put it on over the last week or so. I bought the Jobby warrants.
You mentioned that last time you were on. Yep.
Yeah, and I was waiting. I mean, they had a big pop yesterday, and I have an average price of 64 cents on them, and they just traded $1.10, which is it's almost a double, but not quite. But I'm kind of thinking that with if the market continues up and they had their earnings, they're still burning cash because they haven't got total certification of their aircraft, and it's such wonderful technology. It's really going to change the aviation industry. But so I'm very bullish that stock longer term. Anybody that wants to buy Joby longer term,
what's the ticker on that?
JOBY.
JOBY. Okay, great.
And it's got another competitor in this country, Archer, ACHR. They're basically drone aircraft, electric drone aircraft, and there's just so many great things about them. I used to be an active pilot, so I like all things aviation, and I understand a lot of the positive attributes of that kind of aircraft. But anyway, and the warrants are depending upon what platform you use, they might be /WS or space WS for the Jobby warrants, and those warrants, basically a warrant, and I think we were talking about this the other day. They're issued by the company versus a stock option on an exchange. And on an exchange, if you exercise it, whoever wrote that has to buy the stock and cover it for you. If the company issues the warrant, then they just take stock out of the treasury and issue the stock. Mm-hmm. So they can be dilutive to the company if they play, if there's a lot of them, because obviously they're putting more shares out. But there's a lot of reasons why companies like issue warrants. Sometimes they're just it's like an enticement for people that buy an IPO to get a warrant with their share of stock. So if it does really well, they can buy more at a set price, for a set period of time. Kind of like they're like options. They have a strike price. They have time, but they're issued by the company, and they're issuances of more stock. So they are diluted versus what options are. Anyway,
hey guys, quick heads up on ES, right? We're seeing massive, just a quick liquidation break there, but price seems to be petering out here. And what I'm noticing is that the delta is starting to shift. Stay alert here. Let's pay attention. 73.8375 is our low. So let's monitor that. 14 contracts came off at the low. I'm not hearing anything from the institutional side from Spygate. So typically what we want to see is if we do get a bounce, I want to hear some knocks on it. I want to hear that there's some institutional buying going on at this level. And again, just want to remind you, if you do buy an evaluation from us, that does come free with your evaluation. It's an awesome tool. It can help you get funded right away. So if you need more information on that, go to pitbulltraders.com. All right, let's judge the strength of this bounce. So far, we're into yesterday's value area. And while there is a little bit of a shift in the delta, we're going to make sure that we monitor, see if we can reclaim the settlement at 73.89. At that point, right, we'll start looking for higher lows and gauging the strength and the momentum of that move to see if bulls are getting absorbed, bears are getting absorbed. All right, any questions, folks? Are you guys watching along? Make comment. Let us know what you think. If you have any questions, if not, hit that like button, click subscribe. We're coming on every morning. Every week, we're going to improve the show. We're going to bring you more and more experienced, awesome traders. So just look out for that. So, Rich, do you prefer to trade NASDAQ or do you prefer to trade ES? What's your choice?
ES is definitely a better technical trading tool. The NASDAQ I call a wild beast because, you know, it often overshoots or undershoots whatever it's doing in a wild manner. So if you have, I mean, obviously it moves a lot, the NASDAQ, and if you're right, you can catch big moves. I mean, and I like trading the TQQs in the NASDAQ. That's the triple up, you know, when it's bullish. And same story in the S&Ps. You know, sometimes if you want to, I've been like doing more swing trading as I get older because I just like to do that. And, you know, put stuff on for, you know, like a few days or longer. And right now,
I like those positions. I had in 2024, I had an excellent swing position in the ES. Unfortunately, it was in micros, but I captured something like 435 points at the peak. Yeah.
And that's a lot of money in a micro.
Yeah, no, it played out really well. I think I had like a dozen on to start, but as you know, and it was you know, I'll be honest with you, the fairly easy trade to manage. All right, guys, looks like we're moving higher here. Stay alert right now. I did take that probe long there, but let's see. We need some follow through above the settlement. So I'm not seeing that here. I'll cut it. Stay alert right now. Yeah, so it was an easy trade to manage in terms of. So the first 2 days in the trade, it took off on me. And so the one point that I want to highlight with that is that so that trade was taken in my personal account. And so there's different at that time I was just being introduced to prop firm trading. And so, you know, prop firm trading has added a different has allowed me to trade futures in a different way, right? The rules or guidelines, they keep me in check, but also I can swing from my personal account and kind of trade more intraday or more day trades from my prop accounts. More than one way to skin a cat, guys. All right, so look, we're getting back above the settlement. Let's see if we can get above it. We need to get past the VWAP, right? So our 24-hour VWAP is up at 73.93. That's our next point of reference. If we can reclaim that, then we'll start looking at yesterday's high, 73.95. Then we need to get through what? The opening print, 73.99 quarter. I think that yesterday's high is going to be the first problem area, 73.95. So mark that off. Let's make sure. And for those for y'all tuning in on my chart, what you can see is a light gray area and a dark gray area. Okay, and the light gray area is the overnight session, where the black area is really the RTH session. Stuart points out in the pit in our private community, Stuart points out new high in NQ on the day. Oh, look at that breakout. Oh, that's amazing. So look at this. Wow, this is interesting. So NQ just printed a bullish outside bar in a 15-minute, and the Russell. So guys, the Russell is selling hard with negative internals. So could we be seeing sector rotation? I don't know. That's the first thing I think when I see the indexes start start rotating. And so one thing I want to point out about sector rotation, right, is that it definitely makes trading a bit more difficult, right? You start to see more choppy trades while people, while the bigger banks and the bigger traders unwind positions, put new positions on, then they go simultaneously and hedge those positions with futures. Trading can get a bit choppy. Typically in that environment, you're going to see smaller ranges. You're going to see smaller daily prints. So just be mindful of that. All right, we see EF pulling back here a little bit. Let's see. It looked above the settlement and then was immediately rejected. So we're down 1.25. Let's just monitor this move. The Russell was selling off pretty hard. I think it's going to be hard for ES and Q to really gain any type of notable traction to the upside while small caps are selling off. Let's see. Let's monitor that low. So far, the RTH low 73.8375. We're going to keep an eye on that. Our ticks are working their way lower. Let's take a look at the weighted AD, see what that's doing. And that is squarely negative here. So that's another sign. We've got to keep an eye on this sector rotation business. Definitely makes things more of like an OPEX environment than the smooth, trendy movement we've been seeing higher. And you know what? It being Thursday, guys, and us being so bullish Monday through, really basically really Friday through, I mean, this started last week, right? I mean, this move has been so thrusty, and it started on April 26th, which is basically like last Sunday night. It kind of makes sense that we would perhaps print a daily red bar or maybe an inside day. I don't know. Let me know what you guys think. What's your thought on it? I mean, look at this move, right? It's just been nothing. This is a daily chart on the left, and it's just been 1, 2, 3 days. So actually, no, I'm wrong on that. May 4th, which was Monday, that was a lower print. So yeah, I think that was a fake out, but we found support right at the prior. I think this was Friday's high or Thursday's high. Found support, immediately bounced.
Hey Manny, I found a little stat that I'd like to share. It's just one stat, and it's actually kind of amazing.
Okay.
People because you can see right here. This is my 5-minute chart that I was talking about, and you can see right here's the opening at 9:30. It opened at 73.99 and you can see that the high was made right there in the first 5 minutes. And it's kind of drifted down, from there, but not to say that it won't turn around. But the amazing thing, and that is, if I can get this up here, is that I haven't updated this study in a while. There's probably another 30 or 60 days in here that I need to update this, but it's still got 4,200 days in it, 4,291 days in it, but. In the first 5 minutes, that's 12.16% of the time, the high of the day is made in the first 5 minutes, 12% of the time. The low of the day is made in the first 5 minutes, 13% of the time. So, and that's, I've done that statistic many times over the past few years. That's pretty consistent. So, it's literally, combined, it's like 25% of the time you're either making the high of the day or the low of the day in the first 5 minutes.
Wow. So I wonder what that looks like if you kind of open it up to like maybe a more like the initial balance settlement. So I use 30 minutes for the initial balance.
I use 25.
Okay. So what does that stat look like if you blow it out a little bit in terms of time to the initial balance?
Well, I've got the numbers going out through here, and the thing is it changes based on a lot of other events, and since I haven't worked with this in a while, I mean this is one of the things I'm using to program some of my algorithms or my algos with. But there's a lot of things that influence, what happens. If the second 5 minutes takes out the first 5 minutes to the high and not the low, if it expands and takes out both sides, it changes. I look at it on a 5 minute by 5 minute basis throughout the first 25 minutes to see what happens. But ultimately, if that first 5 minutes it turns into that first 25 minutes, and then the first hour, if that first 5 minute low holds, the day, I have stats on how often the day goes higher and by how much, and I have to really dig through there to like get those stats out right now, and I
get it. I got it. I kind of put you on the spot there. I was just interested. I didn't know how much work it would be to pull it up, but maybe you can bring that on next time.
Well, yeah, I might, but I have the ability to look at a lot of different factors. I mean, there's a lot of seasonality in trading. We know which months are the best months of the year to trade. We know which months are the worst months of the year to trade. I look at whether the year is up or down, whether the quarter's up or down, whether whether we're up or down versus the prior month. There's a lot of things you can look at to see, what influences, whether the market will move up or down. And, the day of the week has an effect on it. I can show you that. Well, we can take a look at some of this. This is one thing that I looked at. I look at on a regular basis. Let's go here. I'll go here and get this.
All right, looks like I'm getting that. I got that first scale off, guys, from that 87 long at 92. Now I'm looking for 97 quarter on the next. Got a little hairy there. We dipped below it, right? But it held, the low held, and we're working our way higher. We've reclaimed the settlement. Now we need to test this VWAP, right? And we need to get above yesterday's high. All right. I don't want to overstay my welcome on this, but that's the target. I'm going to tighten up stops. Those of you who've been following me for a while, I don't like to trade with tight stops. I like to give things room to breathe. However, given what we're seeing, I think it's prudent. We did see that delta shift down there, right? I'll call that out. I'm gonna let you guys know that was the opportunity to get long. There was an attempt to trade lower down there, but that ultimately failed. That push lower didn't gain a following.
I run a lot of things on this computer, so it gets pretty slow during the trading day because I run all my charts on here, and these spreadsheets are really pretty big.
Yeah, I run into the same issue with my machine lately, especially since I started streaming. Right, I'm running into a lot of
Well, I'm looking forward to getting it. I mean, this computer that I'm working on right now is a year old. It's a i9, heavy duty chip, and it was the latest greatest when I bought it a year ago. But they get better and better all the time. Anyway, here is this database here. There's like I think there's 11,000 days of data in here.
All right. What are you
I have this.
Okay. What are we looking at?
Well, we're going to look at something here in a second. I'm just going to. Okay. I just want to.
Oh, all right.
I just want to. I'm trying to go down here. See, I have this. I think I had it updated. Let's go a little further. Not too far.
Target filled.
All right, got that second target, guys. Plus 10 on that one. So got plus 5 so far. Plus 10.
I have this updated till to Tuesday or so this week. Anyway, and I'll update the data, the data after that. But anyway, so this is actually the 5th day of the month, the 5th trading day of the month. So let me go here. Instead of making everybody dizzy looking at this stuff, I can use my fast keys. 5th trading day of the month. So if I go out here to the 5th trading day of the month, and we select all the 5th trading days of the month. So this literally just picks up every 5th day of every month since this goes back to 1980. This database.
1980. Wow. Okay. Let's see what you got. I'm interested.
It's got 11,600 and some odd days of data in it. So it's pretty representative. Let's see. I'm going to go back here to this here and then go to months. And then we're just going to look at May. So this will be all the 5th days of May. There's 46 years of data in here of May. Obviously, this will be the 47th, but let's go here.
Man, I can feel how laggy this thing is getting too. Sucks. All right, guys, if you're just joining us right now, here's what we're looking at. We're monitoring the ES. Okay, what we were looking for was quite simple. We framed it in the pre-market prep. We were looking for a liquidation. If we got a liquidation break off the open, we were hoping that we were going to be monitoring price at the settlement, yesterday's value area. Okay, so we came down, we dipped below, we reclaimed it, and now we're trading higher. We're looking above yesterday's high. Let's see if we can gain traction above it, or does it fade and come back into range? Okay, so keep an eye on that. Yesterday's high, 73.95. We reclaimed the settlement, which is 73.89. We're looking for a bullish continuation of the move, highlighting how just how awesome and strong this move has been higher. Looking for higher targets on higher time frames. Ultimately, I'm looking for 74.50. Rich mentioned that he's looking for I think 70. Ultimately 8,100, right?
Ultimately this year 8,100. Yeah, I think so. I've got a little more work to do on it, but I'm pretty sure that's what I'm looking at right now. Anyway, here's the 5th day of May for the past 46 years. It's been up 52% of the time and down 47%, almost 48% of the time. When the total days, 11,613, have been up 53%, 53.5% of the time, and down 46, basically, and a half percent of the time. So you can see that this day is not. It's pretty in line with most days, but nothing substantial there. Now the other thing we can do is look at because it definitely has an effect on it sometimes. So we can see, like yesterday was an up day. So we can look and see if up days have any influence on that, if it was an up day. So if the prior day was up, and this is going to calculate that out now. I don't know how many days were up yesterday, but if the prior day was up, we'll know if this has it's almost done. I mean, sometimes you can see that. Oh yeah, see when the prior day is up, the 5th day in all those years, that in the 17 years that out of the 46 years, 17 years the prior day was up, and so that means today had when the prior day was up 64% of the time the 5th day was up, and 35% of the time the 5th day was down. So it shows. I mean, sometimes there's really striking biases there. I mean, sometimes you get like 80% of the time or 90% of the time it does that. So that's pretty substantial. And the other thing I can look at too, and I can see when the day of the week is, like today is a Thursday, we can take a look and see if that has any influence on what's going on, like if that changes this at all. looks like there was only this is still calculating. No, yeah, it's still calculating. Come on. There we go. You look down here and see it going through this stuff. I mean, as I say, when I'm running all my other programs, this stuff slows down. There, in this case, there's not really a lot of days, so I wouldn't put too much to this. I mean, obviously, the more events you have, the more reliable the statistic is. But here, when it's on a Thursday, even when the prior day was up, it was down twice and up once. So nothing really there. But sometimes, as I say, sometimes when you look at things like that, it's like an overwhelming statistic, and you have to pay attention to them. Anyway, that's just like one example of some of the stuff that I do. And I do this, I generally look at the first 5 days of the month and the last 5 days of the month, because those statistics, they tend to be pretty reliable. The middle of the month is a little bit different, and some months obviously are more reliable than others. If you get into the seasonally bullish months, like July and November, I mean, or the seasonally bearish months like September. September's the worst month of the year. And September is the only month of the year where there's been more down Septembers than there have been up Septembers. Every other month has had more up months than down months. September's the only exception to that rule.
That's interesting. I would have thought that it was probably. I would have thought I would have thought it would have been August.
Nope, it's September. And actually last September, if you recall, we had a big up move in September, and that really changed a lot. But overall, I think over like the last, in my study, the last 46 years, up until last year, if you'd have stayed out of the market until, throughout the entire month of September every year, you would have been up like 1,000 extra points in the S&P.
Really?
It's a pretty amazing stat.
I wonder what would have happened if you bought every September and then sold in like December.
The problem is if you buy and the market goes down, I mean I think you're saying if you can pick out the low of September.
Got it.
I don't know. I actually am in my monthly study. I'm actually doing I have a database where I'm doing a rolling annual.
All right. Hey, heads up. I think we're getting some news here. Prices jumping around, guys. Tighten up. Make sure you stay alert. Let's see. Fed signal, the next big move being a cut. Being a cut is misleading. Lowering interest rates more than justified will drive up inflation. That's breaking news right now, guys. Heads up. Let's see. I think that's one of the Fed governors speaking. Since the Fed signal on the next move being a cut is misleading, lowering interest rates more than justified will drive up inflation. All right. So that's just breaking news, guys. It's coming to us live and direct from Live Squawk. So stay alert here. Price is jumping around. We got a retest. Interestingly enough, right? Price what? Dipped down to the settlement, 73.89, and it held as support. So let's just see if price goes back down there, retest. And what's interesting is that my position my stop was narrowly missed. Sweet. All right, we just keep monitoring. Narrow miss there. Got lucky. Typically, I don't get lucky. Better be good than lucky. No, actually, maybe it's better to be lucky than good. I don't know. What do you think, Rich?
It's always good to be lucky.
Yeah, for sure.
But if you put yourself in the position to be lucky, that's also a good thing. I mean,
Yeah. How did the saying go? The harder I work, the luckier I get.
Exactly.
Like
Exactly.
that.
That's a great saying. The harder I work, the luckier I get.
Yeah. Yeah. I like that one.
I mean,
let's see here on the hourly where that pullback took us, right? Let's see. Gosh, I'm running my machine's running so slow. That troubles me. Let's see, 7,300. We kind of held that 9-period moving average and then bounced. All right, let's see what we get here. Let's see if we can reclaim. Thus far, price is struggling at yesterday's high, 73.89.75. All right, so we're kind of in this chop zone. Remember, so NQ broke out over the high, over its local high, and the Russell is testing yesterday's low. This is interesting how this is going to play out. No telling. I'm sticking to ES. I'm holding my position. I'm going to follow, respect the process, stick to the process, and let's see where we get, how far we can get on this. Ultimately, I'd love it if we traded up to 74.10. All right. If you're just joining us right now, we're tracking the ES. We're in our pre-market prep. We were looking for a move that took us a test of the settlement, but into yesterday's value area, and whether price was going to be accepted or rejected from yesterday's value area. Thus far, on the first test, monitoring the 15-minute chart, price dipped into yesterday's value area, found buyers, sellers were absorbed. And now we're trying, prices looking to reclaim yesterday's high, which is 73.95. Ultimately, if price gets through the open print, 73.99 quarter, I think it's going to be game on to the upside. Ultimately, if we get through that, we find acceptance above it, then the target becomes 74.10.50, which is the overnight high. All right, guys, quick eye strain break. I'm going to step away for about 20 seconds here. Hang tight. I'm going to leave the charts up, continue to monitor that. Rich is going to hang in here and keep you guys company. Just give me a few seconds.
Yeah.
Look, if you're actively trading ES or NQ and you're struggling with consistency, chasing moves, or just getting completely chopped to pieces on a daily basis,
looking for 74.10, guys.
I'm going to share the exact missing piece that most retail traders literally never learn. It's the reason why you constantly feel like you're one step behind the market. You see, most traders obsess entirely over price. But honestly, that's exactly the problem. Because you're not wrong about the market direction, you're just late. Welcome to the missing dimension. Let me ask you something, because I know you've been there. We all have. You do all your prep, you identify the exact support level, and the market comes right down to it. You enter the trade. And then what happens? The market wicks down, hunts your stop, takes you out for a loss, and then literally seconds later, it rips exactly in the direction you predicted. You got the level right. So why did you get stopped out? It's a visceral pain, isn't it? Nailing the structure, but still bleeding capital because you got chopped up right before the massive run. The hard truth is, the algorithms running this market don't give a damn about your lines on a chart. There is a harsh truth you just have to accept. Being early is the exact same thing as being wrong. Let that really sink in for a second. If you're entirely focused on price levels and waiting on lagging indicators to give you permission to trade, you are guaranteed to be late to the execution. Or you're so early that you get completely swept up in the volatility. In these markets, execution timing directly impacts outcomes. Even milliseconds matter. If you are ignoring the timing of the market's cyclical rotations, it really doesn't matter how great your support and resistance lines are. You're basically trading blind in one dimension.
So, there's a massive shift you need to make right now if you want the professional edge.
The amateur focuses strictly on the where, the price. But think about it. Everybody has the exact same charts. Everybody sees the exact same moving averages. The real unfair advantage? That's time. The when. It's not just about where the market is going. It's about knowing exactly when the market is scheduled to move. This is the ultimate difference between blindly reacting to what just happened and professionally executing on what is structurally anticipated to happen next. Let me introduce you to the framework that changes all of this, the execution clock. And let's get one thing straight right off the bat, okay? This is not an indicator. It's not a signal service. And it definitely isn't some prediction tool promising you magic certainty. It is a time-based framework. It's a predictive, time-segmented algorithmic model that identifies the intraday program before it even runs. It takes the highly complex execution timing of the market and simplifies it into something you can actually use. It's about structured anticipation. To understand how this works, you have to understand that the market does not move randomly. It follows cyclical patterns. The execution clock actually categorizes these into 4 primary series days, from series day 1 through series day 4, each with either a high or low anticipated directional bias. So we call these S1H, S1L, and so on. By identifying which of these 4 primary programs is actually running, we stop guessing. We can literally categorize the intraday program and map out exactly when the algorithmic rotations are scheduled to hit. Let me show you what this actually looks like in practice. Take a series day 1 high, or S1H. Notice how the framework segments the trading session into these highly actionable time zones. You see that first green window there, with a center time of exactly 10:30? That is an actionable time zone. We aren't sitting around waiting for a lagging MACD crossover. We know, going right into the session, that this specific window is highly probable for a local high rotation. You start mapping your price levels directly to these specific timing windows. And look, this isn't some static one-size-fits-all gimmick either. Look at the structure for series day 2 low. The market cycles adapt, and so does the framework. Notice how those windows shift? We have a 10:30 low, a 12:45 high, a 2:30 low. If you've ever wondered why your morning strategy suddenly blows up in the afternoon, or why you always seem to buy the absolute top of the lunchtime chop, well, this is why. You're trading the wrong time window for the specific program running in the market that day. Now, when you're dealing with a series day 3 low, you instantly get the ultimate gift an active trader can have: patience. Because you already know the rotations. You see that red zone from 12 to 1 with the 12:30 center time? If you're tracking this, you aren't panic buying a breakout at 12:15. You already know the algorithmic rotation is scheduled to push lower. You literally stop reacting to every single tick and you start seeing the rotation before it even happens.
That's funny.
And on a series day 4 high, you get the
All right, Rich, I'm back.
concept. Just look at how precisely
Yeah,
these time zones are
I'm
mapped
trying
out.
to get something
10:30,
done here,
12:20,
Manny. I
2:30,
wanted to show
When
you
you take
some
your
of these
meticulously
monthly
researched
stats.
price levels and align them with
Because
these
I've been
specific time
working
rotations,
on this
that
and
is how you
rewriting
actually
stuff.
capture
I
the
mean,
real meat of the swing. You are
you know,
early, you aren't late,
sometimes
you are
things
executing
get screwed
exactly
up
when the
and
volume and the
I'm trying
program
to
are
figure
designed to
out
turn the
why
market.
they're screwed up.
This right here is what separates retail
No
traders getting stopped out
keys.
from professionals executing with precision.
No
So it really comes
keys.
down to
Why is
understanding the
that
anatomy
screwed
of
up
what you're looking
there?
at. Let's break down the 3 structural pillars of these actionable time zones.
Hold on
First
one
up, you have the
second. Let me
windows.
just go
These are
here.
specific, calculated time ranges where we
There it
anticipate a local
is.
high or low to actually form. Second, the center times. This is the absolute apex, the highest probability moment of the anticipated reversal right inside that window. And third, the algorithmic rotations. This is the underlying short-term time delta logic that identifies the most likely path for the rest of the session. It's math,
I need
it's
to close
time,
some of
and
these
it gives
things
you
down,
structured
man. I'm
anticipation.
just getting
So why
really
does all this
laggy
matter?
here.
What's the real takeaway here?
Yeah.
It comes down
How
to
often do
real-world
you
outcomes.
reboot your PC,
Period.
Rich?
This time-based framework is how you finally secure
Probably
your
not
entries.
enough.
It's how you
I
stop
mean,
chasing
sometimes
candles
I
that
let
have
it
already
run the
made their
whole
move.
week. I mean,
It explicitly
because
ends those premature entries where you jump the gun and get chopped out of your position. You
hate
literally
to
transform
lose
from a trader who
stuff,
reacts to the market out of fear and FOMO
but
into a
my
trader who
trading
anticipates the market
computer I
with
shut off
structure
every
and
night.
absolute confidence. This is
Okay,
how you unlock
good.
unmatched intraday
Is there a reason
consistency.
for that?
I want you to think about the
The
trader you
trading
are right now,
computer,
relying
all
solely
I
on
use it
price,
for is
constantly
trading,
feeling a step
so it
behind the
doesn't need to be
algorithms.
on at
Now
night.
contrast that with the
Got
trader
it.
who knows exactly when
Okay.
the rotation is
And
coming.
I
Imagine the
used to have
clarity,
another
the structure,
computer
the confidence.
in
If you're
the
genuinely
other
serious about
room
improving your
that I used to
execution and you want
download
to
my
stop trading
data
blind in
on
one
at
dimension,
night.
this is
So I
exactly
turn
where
it
you
on
start.
and
The
download the
clock is
data and
ticking.
then
You can
throw
get
it
the
on the
roadmap for
cloud and
tomorrow's
then,
open inside the Pitbull Traders.
pick off my data from the cloud. But then I rewrote the program to collect the data, like and now I run that on this program, but I don't run it till the end of the day or at night. I mean, I download about 240 files worth of data. Well, actually more than that. Probably about 300 files worth of data every night to run my sheets.
Dang.
Yeah, it's a lot. Let me see what I got going here. Hold on one second.
Trying to close some things down here to clear up some space, but it's
Yeah.
not helping much. If you guys are just joining us, I'm Manny from Pitbull Traders. I'm joined by Rich, who's our resident quantitative, an analyst guy, trader extraordinaire. Been in the game for quite a bit. Rich has a really interesting approach in that he approaches everything from a data perspective. He's been sharing some of those stats with us today. So thanks for tuning in. Again, we're tracking the ES. We're looking for now for price to see if it finds acceptance above yesterday's high, 73.95, and then if can it breach the daily open. So we always monitor the daily open print, right? That's a good fulcrum to kind of get an idea of how the day is going to print on a daily chart, right? So if we can get back above it, right? If we can reclaim the opening print 73.99 quarter, then if you can imagine the daily candle printing, it will leave a tail, and then the body will, if we close above it, the body will be above that tail, which is a bullish print. And so if we can get above it, if we can get above 73.99 quarter, at that point, what we're looking for is to reach and to target the overnight high at 74.10. Hey, Rich, can you, yeah, please, thanks.
That's my wife. That'll be my wife.
Thank you.
It's somebody calling her rather, not nothing I can do about that. And turn that off.
Let me just
See if we get here.
Back to this. No thanks. Not sure if you guys tuned in yesterday. I know a bunch of you did on for our lunch segment, which was markets and mindset with Danny and Lauren. There was some great stuff discussed there. I'm looking to get they're going to be on every Wednesday going forward, so look out for that. I love the mindset stuff. I think it's so overlooked. It's so infrequently talked about, and that's really where the edge is, right? Our edge is either made or it's either made, or we either make it or break it based on our mindset. And so it's always fun to work on that stuff and to hear what other traders are looking at and how they approach it. The worst thing we could do as traders is try to go at this on our own, right? Our entire team here is built around, having a trader collective, guys like Rich, guys like David, guys like Bo, Danny, Lauren, coming in, sharing their perspectives, right? You want to get yourself around a bunch of smart traders, a bunch of experienced traders that can share their insight, that can share their knowledge, and they help you. I mean, it was Tony Robbins that said the fastest way to achieve success in something is to emulate someone who's already doing it. So, yeah, just be mindful of that. It's important. Mindset is so important. I believe that's where the true edge is. And if you think if you doubt that, think about it like this, right? So we're all pretty much looking at the same stuff, right? We're all looking at the same, more or less the same chart patterns, the same The same data, everything, pretty much everything that we look at is not exclusive. And so, what is the difference between the trader that's making a ton of money and the one that's still struggling? Well, I think for sure it's your mindset. So look out for that on Wednesdays. Wednesdays at noon. And if you're just joining in right now, what we saw on this dip, we thought we had a quick flash dip down to test the settlement. And what that was I think there was a Fed governor making a statement about lower rates. And if I'm correct, let me just check here on our feed. Yeah, so the statement was the inflation expectations are pretty well anchored right now. Any cuts would lead, they believe that any cuts would lead to higher inflation. So I don't think the market liked that very much. But that's telling though, right? We got that negative news from the Fed governor who was speaking. He came out and said, if we cut rates, the market wants lower rates. Obviously, everybody knows that. And he came out and said that if we cut rates, that will hurt inflation. No one wants inflation. And the market dipped on that news. And what happened? Immediately, we wicked on that dip and got bought up. So just think about that when you're thinking about any bullish or short trades. We want to stay in alignment with the day's dominant forces. And that what happened there, I think, is really telling on how this day is going to unfold. Could be wrong. We could get a Truth Social post. Thanks, everything. Let me know if you guys have any questions. Post them in the chat. If you're watching, tap that like button, hit subscribe, leave us a comment. Let us know how we're doing.
Hey, when did you say Danny was on?
Danny and Lauren were on yesterday.
I'm gonna have to watch them. I know Danny from the floor. Her dad was down on the floor. He taught a lot of guys a lot of good stuff. He was a really great guy, great teacher.
Really?
Oh yeah.
Yeah, I like Lauren a lot. I really like
Danny though. I'm talking about Danny.
Oh, sorry, meant Danny. Sorry. Yeah. No, I mean I like both of them. I like what they both bring to the table. Super smart, super experienced.
Super experienced. Danny was down on the floor when I was down there.
Really?
Yeah.
That's interesting.
She was down there. Hold on. This is formula.
All right. Heads up here on ES. We keep wicking above yesterday's high here on the 15-minute. It's been 3 wicks. Okay. We had this doji print, and now price is struggling to gain acceptance above. So either two things are going to happen. The longer we stay up here, the longer these sellers are going to be liquidated. Because currently, the thinking has to be that short trades are being placed there, kind of keeping the market down, and that those sellers are being absorbed by buyers. Ultimately, they're going to throw in the towel, and then we'll see what happens at the daily open. Again, yesterday's high is the reclaim level. Right now, it's the most important level on our screen. And then the next level that matters is 73.99 quarter. We need to get through the opening print.
Danny, I'm working on my stuff. If I can get this, if I can get a couple more lines of code fixed, I can show you some stuff.
Okay.
I'm just
looking forward to it.
it's always, you got to check and double check. And what do I have here? I'm going to do this, this, and this.
Moving higher now. Looking at 73.99. See if we can get above it and find some acceptance up there.
Yeah, above 73.99, that would do it. And big round numbers tend to hold the market down too. Like, so that's just under 7,400 when they can pop through a big round number. It's a big deal.
Yeah, I like to have my I like to have my scales at round numbers because it's rare to see the market. It's rare to see the market stop on a round number. So I feel like the thinking there is I know I'll get filled.
Right. Yep. Okay, I should have something in a little bit. Oh.
All right, looking higher now. Let's see what we get. Looking ultimately, I'm targeting up there at 74.10. We'll see if we get it. See if we get lucky. I am offered at 74.10.
Actually, I do have something else I could show you right now.
Sure. I'm interested. Let's go.
Let me see if I get where I have this. I have it right here. This is BS, and what I have, Manny, here is we went through the first hour already. First hour, the 5-day range has been average range has been 32.30.
Okay.
So, and the daily range, the 5-day average daily range has been 63.75, and you can see the 10-day has been 65. So it's been pretty consistent, 73. So I think we could expect a 50, 60 point range today, and usually about half that range. Looking here up here, it's been 30 to 30 to 35 over the past 30 days. It's still right in there. How big is the range today? Let's take a look at that real quick. And the reason I say that is because let's go here and just amp this out real quick. So this range has been it's been pretty tight this first hour here today. Was that 73.83 to 99? It's been about half the size of the ranges over the past few days. But if we're expecting, if I think we can expect 50, 60 points for the day, breaking out on the upside right here, with nothing above except these old highs from yesterday. Actually, that was this early this morning, last night. The overnight session high was right there at 74.10. If we get a close up here, especially at 11 o'clock. Now let me look at my hourly chart. If we get a close at 11 o'clock above this 73.96.
Okay.
Or especially the 73.99 quarter, I think we're going to be targeting that 74.10, and then we could go up to this could go up to 74.5 today. 74.49.85. It could go up to the 1 SD level. But
You know
if
what? That kind of makes sense with so I'm looking at a resistance point at 74.41, 74.45 ish. I think the market's going to struggle there, but I think we could hit that today as well. So that's just in zone. I think we're in alignment on that.
well, and the way, as they say, the way I look at it, I look at my sheets, and I have that first hour, and when you look at the first hour and look at the rest of the day, I mean that it's been consistently. I mean, we've had a lot of 60 to 65 point days in the last 30 days. So and it's been a tight range up to now, and kind of holding there. It just bounced down, and now we're back above the BGL. And so I would look at this hourly close, because an hourly close up there will also be above my 480 level. So
Okay.
and that 480 level is 73.96.75, which is, although the open range high was a little bit higher. So above 7,400 at 11 o'clock, and above the BGL, I think you got to be long, and you got to be looking to, and you don't look to take 2 or 3 points. Look to take, I think you can look to take 30 or 40, maybe even 50 points out of this, because I think there's a good probability it'll go up to the 1SD level.
And what is that level, Rich? Once again,
74.49.85.
74.49. Okay. Hey, so yeah, I mean, it's pretty amazing. I think that we can, if we hit this target today. I've had the 74.50 target, 74.50 to 7,500 on my chart for over a year, and I recently wrote about it in the opening print. I'm not sure if you saw it, but because I knew that target was out there, I waited till we were dipping, and I wrote it when ES was trading 6,400. It came out on March 30th. If you guys want to check that out, it's on MrTopStep.com. And I put it out because I knew we were diverging. Price was dipping lower. We made a Wyckoff distribution top. That inventory got reset, and then when we ripped, I knew it. Yeah, I was like, it's on. We're going higher. It's amazing that we're getting there in the amount of time, though. I just didn't think that we would get there this fast. I thought it would be later in the year.
Well, I'm as now that I'm in the position to start, getting back to some real work. I will have probabilities on, all this stuff taking place. That's what I'm doing now. I'm rewriting the monthly code, and I have monthly probabilities, and it's all fairly sophisticated. But I'll be going back and looking at my opening range, and I've done stats on it before, but every time I redo something, I get more intricate about what I do, and look at more factors, and can zero in on things. But this is absolutely looking. I mean, if they hold this level going into after 11 o'clock,
and that's 74.49. Sorry, what level did you hold?
I think they'll go. No, if they hold this 7,400 area.
Right. So yeah, guys, heads up. We've been. If you're just joining us, we're tracking the ES. Our next up need was 73.99. That's the opening print. Currently, we're looking at we need to breach and stay above 74.2. We have a match with Rich, who's looking for us to stay above 7,400. If we can do that and make it stick, I think we're going to tag 74.10 to satisfy our 96% stat. If you want to know more about that, hit me up on X or send me an email. You can find me on X at manny_trends or manny@pitbulltraders.com.
And as I say, I actually think if they hold that, they're going to go past 10 and go up to that 74.49.85.
Yeah, I'm offered up there for a scale. We'll see if we can get it. I'll see if I can get it. See if I can get lucky. So I have a scale at just ahead of that overnight high at 74.10. And then,
well, as I said, I look at the 11 o'clock. That 11 o'clock hour is pretty critical. About what it's doing. If you got a strong move and it stays above my my 480 level, and that 480 level is 73.96.75.
73.96.75. Okay.
That's my gold level upside. It was a pretty tight market last night on my gold levels, but if it stays above there at 11 o'clock, you can put a stop in below the BGL and I don't ever do anything unless it closes on a time basis below there, but that's what I would be looking at.
There's also a balance target up there at 74.07, and if you guys want to know what a balance target is it's a market profile, it's a volume profile target that gets set. Typically, what it is an extension of the profile, and once price gets up, it hits the balance target. It's just a range projection of the prior day's range. They work all right. They're not the best. I don't take them too seriously. Yeah, again, if you're tuning in right now, on the left-hand chart, we have an hourly chart to make sure we stay in alignment with the dominant trend. We're looking for a trend change. Obviously, this market is on a rip, right? It's just holding this 9-period moving average with nary a pullback. We pulled back to it earlier today, and then we reclaimed it. On our 15-minute time frame, price is looking to reclaim the daily open, 73.99 quarter. It needs to get above 74.02, and we have an alignment there on that price. Rich is also looking for a close above that level. If we can get them to stick, then we're targeting the overnight high at 74.10.
Yep.
That would satisfy a tag of the 74.10 would satisfy our 96% stat. There's very, very few statistics that are in the 90 percentile. So we want to make sure that we know those and stay alert for those and trade on the right side of them. Market's looking like, I mean, it's moving higher like it had coffee this morning. It's just right.
Yeah, coffee. I need some more coffee. More coffee.
Yeah, go for it, especially the NQ. It's interesting that the Russell dug in. It's trading higher now. So yeah, we're getting that follow through now.
Yeah. Oh, I have so much to do here.
You know, sometimes when the markets run slowly, especially during that lunch period, you know, the one thing I've noticed, I coach a couple of guys, a couple of traders, and most of just looking over some of their notes here, and one of the things I noticed is most of their bad trades are starting off in that time frame. They're starting off from boredom.
Boredom.
A lot of trading mistakes happen when traders, you know, feel they need to always be involved. And that's the important part about having you know, someone in your orbit to help you to, you know, to my, like I always make since I'm a baseball coach, I always use baseball analogies, right? And one of the things that's important to know is that you can't see your own swing, right? You need to have someone overseeing it. And it was for me a big difference in my trading was when I got a mentor, and I've had three, and at each different phase I learned things from each one of them. If you're still having a hard time, I highly suggest you just get a trading buddy or someone to help you cut through what you may not be seeing.
Manny, did you ever play baseball professionally?
No, no, I never got paid to play. Nope. Unfortunately. When I was in college playing, I was, you know, if you'd have asked me, I would have thought that it was, you know, probably, I don't know, like the situation. But in hindsight, I probably just wasn't good enough.
Oh, you got to be really good.
Yeah, for sure. It's like, you know, you have to be extremely good. But I just, you know, there's a lot of baseball in my family. In fact, my nephew, who's a freshman playing D1 baseball, and he just got rookie of. So he's the only freshman. It's interesting because he's the only freshman starter on the team. And as in college, it's a big difference between the body of a freshman and the body of a sophomore, even a junior, third year student. Like they just mature so much, they spend so much time in the gym. So for him to be starting on that team on a roster of 36 is a big deal. And in fact, he just yesterday, my brother sent me his the article that went online, and he won Rookie of the Year, which is just amazing.
Wow.
And so similarly, my daughter is so she's a freshman in high school, and that's a roster of 22, and she's the only freshman starter on that team. And it's a really, really good team. It's really competitive. Out of 22 tryouts, she's the only one that's starting.
Where did you play? What school?
I played at St. John's in New York.
Oh, I've heard of St. John's. Yeah.
Mm-hmm.
I didn't play college.
So it was division. It was Division III. You know, it was. You know, I mean, it was more the school that I wanted to go to.
Right.
Atomic asked, "Hi, Manny. I was wondering the time zone for your timing guide and intraday swings that's posted on X. Central time? Nope, it's not Central. It's Eastern. Eastern time.
I use Eastern time too. All my times are Eastern time.
Yep.
It's
good question though. Thanks, Atomic. Yep. Any other questions? Let me know. In fact, so heads up, I'm scheduling a workshop on that. Look out for that very soon. I've got all the materials. I just need the time. Like, so for the last month, every weekend, we've just been traveling, going to, you know, all over Florida, Georgia, Alabama, playing these tournaments. We won the last two, and then the third one, we placed second. So we're playing really good. That's exciting. But now last weekend was the first weekend I didn't have a travel tournament in the month. And so I just took that weekend to kind of chill out, relax, and get some rest. The season's almost over, so I'm looking to have a lot more time on my hand to put that stuff together. Yeah, I've had a bunch of uncles. There's just a lot of baseball in our family, and you know, my dad immigrated in 1967 from the Dominican Republic, so there's just a ton of baseball there. And I've had a ton of uncles and cousins in the minors, in the Caribbean League, and I even had one uncle who died on a baseball field. We're just a big baseball family.
Yeah, Dominicans. There's a lot of baseball players down there.
Yeah, yeah, they're pretty.
They're good.
Yeah, they're pretty good, and they're really. It's just part of the fabric of the country, you know. Like
Yeah.
something's wrong with you if you don't play. Like literally, my dad was like duct taping baseballs to our hands when we like, don't drop the ball.
Making you sleep with your glove, eh?
Yep. Yeah. He did all the time. Like so, he'd like take a handful of popcorn, throw it up in the air, and we had to like hit the red popcorn, only the red one. Like it was just a bunch of crazy stuff he had us do.
Wow.
Yeah. It was in hindsight. I at the time I thought it was brutal. I just wanted to go like outside and play with my friends, but when I got to high school, I was really happy about it.
Yeah. Well, I think any sport. I mean, if you're going to be really good at it, you got to start it like as a toddler, almost from when you start walking.
Yeah. So we live in a youth sports hotbed in Tampa, and one of the things. So believe it or not, I don't drive my kids. My wife played. My wife had full ride scholarships for soccer, and we don't really push them to play. If they want to play, we'll support them, and they just took to it. It just came naturally. So all three of them play. All three of them are pretty good, but we don't push them like you would think, and they tell us when they want to go, and we kind of support them. And our objective was just simple. It was just, hey, let's get them to play high school ball so that during those dangerous years, where kids tend to veer off the right path, they have something to do. It builds good, strong mindset. It establishes the I can do anything mindset.
Yeah,
and up to them.
Sports like that are very, very good. I mean, it's almost 11 o'clock. We're breaking out to the upside for sure. This market is more than likely going higher now. I mean,
looking at that higher target right here, 74.25. If I get it filled, it'll be I think it'll be like 21, 22 points.
I mean, as this is anything below there's the overnight high at 410.5.
Yep.
I mean, I think it's going. I think it's going to press up towards the 1 SD level. There's really nothing up there to stop it.
Yeah, we're closing in on that target now.
I mean, it could pull back a little bit in here, but if it pulled back at this point in time, as long as it's above the BGL, which is coming in at 73.99, I'd say it's a buy. And and basically, if you could buy it down there, the stop point would be any 5-minute close below the that BGL, but it's starting to slope up. Market's been so strong, I don't see why it won't continue to go up. But
so what? I'm sorry. What was this? What was the BGL price?
it's at 73.98.89. You see it on my chart right now.
Okay, 73.98. Got it. Check.
So I'm gonna go get something to eat real quick. And,
No, thanks for joining us, Rich. That was awesome. Always happy to have you on. Rich has a unique approach. Love what he shares. Love his stuff. I take Rich's numbers really seriously. Made a ton of money with Rich. If you guys want to check Rich out, go to handlestats.com. And if not, you can join the pit and then find out more information there.
Yeah, I'm gonna have a lot of stuff redone over the next couple of weeks, Manny, and I'll go over it. Right now, I'm updating the code on this, so I to include some more stuff. But this is all my monthly stats, and my monthly data. This monthly database goes back to 1970, so I got all the monthly stats back to 1970. I look at a lot of different stuff, and and then after, not only do I look at a lot of different stuff, after I look at it, I do conditional formatting. Like I have when all the highs and lows of the year are made, what months they're made in, and what that affects, and then I look at monthly, up or down, and when I go through here, I can and then I do more conditional formatting. Like right now, let's see, we're in May already. So if I just go through here, I guess I changed. I'm gonna have to redo this, but as I say, I'm redoing this whole program. But when I do this, I can look and see cumulatively where we are in the year, and have a good idea about whether the years. Oh, the reason these conditional formats, this has changed because when you use Excel to code and you do conditional formatting, it kind of stays. It doesn't move with the columns when you insert more columns. It kind of, that part of the formatting goes back, so I got to wipe it out and redo it because I've added more data in, and I do structured referencing for everything else. But that conditional formatting, you can't structure it. There's no structured referencing for it, so it just once you put it in a column, it stays in the column. And if I insert other columns like here and put other stuff in them, it moves everything out. So that's why I have to I'll have to redo the referencing when I'm through, because I'm adding a lot of stuff that I'm looking at in here, and it's a programming thing, that changes like that. There's benefits and detractions, to using. I do some things in Python. I do a little bit of that, but I started out using Excel, and Excel it's really, I can convert any of my programs because I do structured referencing into Python, which I'll probably start doing more. But when I add stuff to it, I just like to do it this way because I know what I'm doing in this sense. But it's a lot of work to change things up. Like there's hundreds of, there's probably 500 different lines of code in this thing here, and I'm in the process of rewriting every one of them.
Rich is our mad scientist. You lost me at coding.
Yeah, but as I say, when I get through with when I'm finished with this, it gives you a definite probability. I can break things down 6 ways to breakfast. I write really intricate stuff into my algorithms. So I won't even tell you what all I write in here, but. Good
to know, but I'd probably fall asleep if you did.
Well, when I finish this, I'll come in the room. I'll have this finished by next week.
Really? That'd be great. Love to hear about it.
And I'll show you. But it's
sorry, Rich, real quick, guys, real quick. So I took that off at 18.25 points because I wasn't going to be a prick for a tick. But what I'm seeing here is the big delta divergence, right? Price is pulling back pretty strongly. So just wanted to alert you to that. I'm still targeting higher prices over the overnight high. However, I didn't want to sit through a pullback here, having missed my target by a tick. So instead of the 21 or 22 points, I took 18.5. I'm not going to sit through that long pullback. Sorry, Rich. I just want to alert the folks watching.
That's more important. It's more important than me rambling on. And I'm going to take off and go get somebody right in here. This is what I said on a pullback. Down here, this is where you can take a shot at buying if you think it's going to go back up. And you're risking what transpire in the next 5 minutes. If it closes below that BGL or below the VWAP in the next 5 minutes, you just get out. And you got to watch the NASDAQ too and see how that's playing. But if you buy down here, I think you're really only risking 5 minutes, and if it rallies back up like right in here, it's probably headed higher again. And all it did was went down and tested the opening range. That's my 25-minute opening range right there. So what was the high of my opening range was right here at I have it covered up with that other blue. It's 74 and a quarter exactly. And what did it go down here and hit? It hit that low is 7,400.25. It came down and hit and I use a 25-minute opening range. That's so if you look at yours, Manny, you say you look at like a 30-minute time
Correct.
frame.
Yep.
I don't know what the 30 minutes, it'd probably be slightly different than this. But maybe not. Sometimes it is that 5 minutes makes a big difference. But anyway, it just went down and touched the top of that of what I call the opening range to the tick, and then it rallied. Now it's rallying back up. If this closes up in here, it's look at the formation of the candle. It's gonna have a nice tail on it, and it looks like and where did it stop? It hit that overnight high at 410.
It came like 2 ticks shy.
Two ticks away from the overnight high.
Yeah.
So now if they get back up there and take out that overnight high, there's no reason why it shouldn't keep on sailing along.
Right. Yep.
So that's what I'd be looking at, and then when it gets to noon, the other thing that I do when it gets to noon, Manny, is I look at the body of the 8 o'clock to noon candle, and the body that's a 240 minute candle, and I look at the body of a 120 minute candle, and you can look at that midpoints of those candles, and figure out in this case it would be a support area that if they break back down below there, the market's negative. If they hold those levels, it's definitely going higher. And those, like we could probably look at the 8 o'clock till 10 o'clock already, but I like doing the 240 at noon, because the bigger the candle, the bigger the time frame, the more likely it's got support. So we're gonna have, if this closes on the highs at noon, I think that it's very unlikely that it'll go back down, and it'll probably will extend up higher. So the next hour after this, if we make a new high in the next hour and it closes noon on the highs, it's going to trend up the rest of the afternoon. That's what I'd be looking for.
Great to know. Thanks, Rich. Thanks for sharing that with us. I know you want to go grab a bite to eat. So
yeah, I do.
Thanks for the contribution. Appreciate your support.
Thanks for letting me chat, Manny.
Nope, no worries. Hey guys, thanks. So if you guys want to check Rich out, handlestats.com, go check him out. Check his stuff out. It's really great. A quantitative, data-driven approach. All right, let's get back into the charts here. All right, so we had that pullback. If you guys are following the execution clock, you know what we're looking for here. We're running on Market Blueprint, had an excellent setup thus far. The Market Blueprint got the low of the day. And again, not to boast, but just to show you the efficacy of the work, right? The Market Blueprint it's a very strong trading plan. And last week alone, the Market Blueprint had caught the low of the day 3 times. On Wednesday, it had the high of the day and the low of the day. And the day that it didn't catch the low of the day, it had the high of the day. So just look out, go to my X feed, check that out. It's posted there. Thus far, our low of the day is 73.8375. And I'll show it here. We had a support as setup number 1. Look to buy what? 73.84, 73.80 to 84. It's posted on my X feed. Go check it out, as well as the execution clock. Coming to you from sunny South Tampa, we have another beautiful day out there, guys. Oh man, I just sound like a weather guy. Weather's really great here. Love the weather. It's about 81 degrees outside right now. Always sunny. I think you can see that from behind me. We typically don't even have to turn on the lights in our house during the day. Not sure where that came from, but anyhow. We're about to head into the chop period of the day. Remember, don't click yourself to death during the lunch period. It's the consolidation, low volume period of the day. It's like I tell my hitters, right? Don't swing at the dirt. Yeah, just keep that in mind. It's the same thing. It's the same thing in ES. Don't swing at the chop in the middle of the range. Wait for your edge. Wait for your pitch. Wait for the edges to trade. During lunch, you want to typically trade later in the balance area, later than earlier. So right now we're pulling back. We made a pullback to 7,400 quarter, and looks like we're going to start forming a balance area here. Give it a couple of prints, let them form out first. We don't want to be first. We're never going to catch the bottom or the top.
All right,
Guys
let's dive
saying
right into this
break. I'll
explainer.
be right
If you're
back. Just
absolutely
give me 2
exhausted by the daily
minutes.
chaos of the
I'll be right
markets,
back,
you're in the
guys.
right place. Today, we're flipping the script completely with the market blueprint. Look, we've got to stop reacting to the noise. So many E-mini S&P 500 day traders out there are literally bleeding money every single day. Why? Because they're trading on emotion. They're jumping at shadows, and honestly, they're just outright guessing. It is time to start executing the plan. And I want to be crystal clear here. This isn't about making wild market predictions. What we're looking at is a highly mechanical framework. It's built for one thing and one thing only: absolute, institutional grade execution. So, what's actually holding this framework up? It's built on 3 foundational pillars. First, you've got precision levels. These tell you exactly where to strike without hesitation. Second is your risk guide, and that's driven by a strict stop-loss protocol, or SLP. And finally, you have the overall market context, which we map out in our market musings. To show you what a true precision level looks like in practice, check out April 29th. We have a very specific, incredibly tight 4-point ES band locked in right at 7112 to 7116 for a support buy. You pair that exact level with the market musings giving you the context on the trend, and, well, there's just zero guesswork left. Then, jumping over to May 1st, we see another ES support buy zone, this time right at 7227 to 7231. But notice what's absolutely crucial here. Integrating the stop-loss protocol, the SLP, is strictly mandatory. Relying on a strict 5 to 8 point risk guide to define your risk is exactly what keeps you safely in the game. Okay, so the million-dollar question: does it actually work? Let's crack open the performance audit. The magic number here is 3. On 3 entirely separate trading days, our support buys perfectly captured the absolute low of the day, and they did it within a surgical 5-point band. Next, number 1. That's the exact number of days during the week where our resistance cells cleanly captured the absolute high of the day. Again, no panicking, no reacting, just waiting for the plan to come to you. But guys, here is the ultimate proof of this mathematical precision. We call it the double tap. On one phenomenal standout day, the blueprint literally nailed both the exact high of the day and the exact low of the day.
Oh, sorry,
one
Turbo
single
Fan. I
session.
didn't see your
I
question.
mean, think about how wild that is to
Let me
capture
just
both
make sure
ends
we get
perfectly.
back here. Hang
So
tight.
what are you waiting for? You have got to stop reacting to the noise and start executing the plan. If you are ready to stop guessing and finally step up to professional level execution, email the word blueprint to Manny at pitbulltraders.com right now. Go get it.
All right, we're back. Sorry, Turbo Fan asks, hey, Ad Handle says, do you incorporate any market regime labeling on your decision process? Yeah, we're going to have to save that one for Rich. I'm not sure. Yeah, he was. So it seemed like he was hungry. Like you know, him talking about it, that kind of got me thinking because I had a workout this morning, and then I came back. I had to get the plan ready. I had to get the clock out. I had to get all that stuff posted. I had to do my family stuff, and I didn't have a chance to grab anything to eat. Um, so I might be cutting off a little bit early today because I have some meetings to attend after this. If we get a nice balance area here forming and we stay above the open, 73.99 quarter, I'm looking to add there. I don't want to add too early in the window. If you're following the clock, you know what I mean. Typically, I want to wait towards the latter part of that window, and I can always just catch a higher low pullback. Oh, it looks like I just got pinged on my phone. I looks like my I have a Tesla. It looks like it's getting another FSD update. So that's kind of cool. Full self-driving. When I'm on longer trips on the highway, I'm probably only driving the car about, I'd say about 50% of the time. It gets less and less as I trust it more and more. It gets better at the turns, but it's kind of like trusting a breakout, right? It's kind of like trusting a breakout. It's hard to do. Or, you know, on a breakout, you probably have your hand on the mouse, right? It's kind of like me when I have full self driving on. I have my foot on the brake. Another similarity would probably be like, you know, trusting a breakout would probably be like, uh, you know, I run the algos, but I always have a kill switch going on. I haven't ran them today just because I had that trade on and I was kind of streaming and paying attention to this stuff. I probably should have ran them. Yesterday was awesome. I had them on and I didn't realize they triggered and hit the targets. It's pretty cool. Let me know where you guys are trading from. Drop your location. I'm trading from Tampa. Let me know where you guys are. Oh, got a croak on Spygate, so stay alert right here. That means the sell program just went off. How much was it? 221 million. Let's see if that's going to get countered. Boca Raton Turbofan. Nice. I think one of our Danny's from Delray Beach, so that's pretty close to you. Right? How far is Delray Beach from you? Yeah, 10 minutes. Yep. Yep. All right, we hear those sell programs going off. Let's see. Price getting a little bit jittery. Holding the daily open at 73.99 quarter. Let this balance area form before you pull any triggers, right? We're still early in this pullback. We only have one print so far. Especially for you guys trading prop accounts, trading evaluation. Sometimes, you could be right on the position, right on the entry, but your account just can't handle the volatility. Wait for later in the balanced area. Give it like another 15 minutes. Marty is also around here too. Highland Beach, I think. That's what Towboat Fan says in our private community. Yeah, Marty's definitely in that area. How long have you been in Boca? 12 years now. Lived in Philadelphia before, right? Okay, check. Getting away from all that soggy weather. Now it's just hot. All right, this is getting a little froggy here. We're getting some croaks. We're getting a liquidation break. Stay alert here. Settlement is 73.89.50. We want to make sure that holds. Guys, that's going to call it for me for today. Thanks for tuning in. Just give me make sure I check everything, check all my check boxes here. All right, guys, you got the levels on the market blueprint. You got the timing. If you get anything out of this at all, please do me a favor. Hit the like button, hit the comments, subscribe. If you want to go deeper into the execution clock or the market blueprint trade plan, email me, manny at pitbulltraders.com. Remember, react, don't predict, and we'll see you tomorrow back on at 9 a.m. or 10 a.m.
In a market built for machines, where the odds feel stacked against the retail trader, one firm is turning the tide. Welcome to Pitbull Traders, the next generation in trading. This is more than just an evaluation. It's a development ground, designed to sharpen your edge, build your discipline, and back your growth with real capital. With affordable evaluations, clear rules, and a structure built to reward consistency, Pitbull Traders is here to help serious traders level up.